Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So in general, the target that we have specified has been completed. It was relatively fast, and you can see accurate performance of the gold market and XOP on the daily charts, also some targets on the weekly charts, and as you will see later on the follow time frame charts, also ABCD that we have discussed recently. So currently these targets have been touched, and at this point, this bit different strategy should be for those of you who would like to invest in the gold, keeping it for a long term, and for those who are mostly speculative trader. So for investment in the long term, you could consider taking long position despite some technical moments, because you are buying without the leverage and you intend to keep it for a long time. So sometimes personally I could buy the futures on the gold, but I'm buying the amount that exclude the margin using. So I just calculate my assets that I would like to invest and divide it on the price for the troy ounce for the gold, and buying for the same amount in fact the spot price for the gold using no leverage. That's led me to not use any stop orders and just keep the investment in the gold market. So this is the approach that you could follow if you would like to invest and keep gold for a few months at least, or maybe even a couple of years, if you just would like to protect your assets. If you would like to speculate with the gold, currently it's not a good position for taking the long position, because it seems that market is taking some temporal pause, trying to absorb the really huge amount of information that have been just moving on the markets from the media. And that's a bit stunning the markets, and as you can see, it's pause taken not only in the gold, some performance you can see on the Forex market, and maybe in the background of these events we could get some pullback, at least from the technical point of view. If we are trying to trade gold for speculative purposes, it's not a good point for taking the long position. And from that standpoint, here is we have really great stuff for Brent bond trade. We have great upward thrust reaching on the major target. Market is oversold as on the weekly, as on the daily chart. Completion important extensions, and from that standpoint it makes sense to wait for a pullback. Perfectly if we will get some retracement back to the 1950, 1960, where we have confluence, where probably we will get the daily oversold level, which very often happens when the market hits the weekly overbought. It very often drops to the daily oversold. It's normal performance. We also could apply, for example, gradual step in buying on the gold, for instance, taking some minor position around 2000 level, 1996. If market drop lower, add bulk of the position here with the stops just below the confluence. So that's a classical technical approach for speculative traders, because taking long positions for speculative purposes right here, it seems not quite reasonable. On the 4-hour time frame chart, the ABCD pattern has been completed. The bullish nuance here stands with the speed of the CD leg. As you can see, it much faster than AB, which means that after market completes the response to the OP, shows some pullback, the next step will be to action to the XOP target. So this is usual behavior when the market accelerates to the OP. We will see. Currently, we are mostly watching for a retracement, how it will go. So on the hourly chart, we have showed some bearish moments, whether it's currently the question whether this will work or not. But in general, you could see this performance is atypical for the double repo pattern. Although, in fact, you do not have the clear feature of the double repo, but this, with these 3 bars, it perfectly illustrates how usually what's the core of the Brent bottom. Take a look, market is showing new top, forming the new top, then retracement starting. This is usually equals to first close below the 3 by 3. Those of you who understand what I'm talking about on Napoli pattern. So next step is a close above the 3x3 again when the market trying to push for the previous top, suggesting that this is just the temporal pullback, retracement, those traders using it for taking the new long position. And when the market fails to do this, forming minor wash and rinse of this top, bears step in and collapse the market. So they actually, market here, the bulls are capitulating when they trying to pass market for the previous top, but couldn't do this, and market is just collapsed. So this is, by the shape, this is not double repo, but the nature, by the core, this is double repo pattern, guys. And we have the big bearish candle here with the reversal features as well as markets closing below the lows of the previous two sessions, which makes me think that maybe theoretically we could get some minor ABC retracement here. At the same time, previous frosting action is rather strong, and here it makes sense to wait for completion this minor ABC pattern and forming this Garters triple to sell. So if our scalp trader would like to take the short position, that's the setup that theoretically you could consider. Besides, if for example you take position with this C point, it will be very small stop order that you need to use, just placing stop somewhere just above this area. But guys, I suggest that maybe be aware of the wash and rinse of this previous top, because gold is very cunning market. And if you'll take a look at the previous top, probably on the weekly chart, you will see, first of all, here's the major XOP 1276 has not been reached, and this top has not been challenged. That's why it would be better, if you still would like to anticipate taking short position, place stop somewhere in excess of these levels, which would be even more probably useful. You need to also be prepared if it will be the butterfly. From that standpoint, you need to place stops at least above the 127 or maybe even 221 area. It's just because here above the 2075 lots of stop orders, and once they will be triggered, which gold maybe could try to do this, it could just show some upward spike occasionally maybe to the 21 area. It's very probable. And here's choices up to you. Either you're anticipating trying to take the short position here with a place above the 21, or you just do nothing, wait for the wash and rinse of the 2075. And when market shows the spike, you're trying to sell with the butterfly that might be formed to the 21. This is a bit complicated. This demands some experience to do this, but I just explained everything with this possible setup for scalp traders. You could choose what you would like more. You could split position. For instance, take the half here. If market shows the wash and rinse starting jumping up, trying to complete 21, you will take another one here, and this will be on average not bad position around 2085. So there's a possible starting of the downward retracement. But that is, guys, already the speculative tricks. So this is only for those of you who are trading on intraday charts. It's interesting, but our major view is bullish, and we mostly will be watching for retracement on the daily chart, where you could consider taking the new long position. That's our, let's call it, major focus.